United States holds a pivotal position in the global economy as the world's largest economic power. Therefore, if the American economy were to collapse, the ramifications would be profound and far-reaching, affecting virtually every nation and economic sector around the globe. This essay explores the potential consequences of such a collapse, highlighting its impact on global markets, specific countries, and the broader financial and social landscape. Firstly, an economic collapse in the United States would trigger a severe recession domestically. Given that the US economy is a major driver of global consumer demand and investment, a downturn would lead to a sharp decline in spending and capital flows. This contraction would not remain isolated. It would ripple through international financial markets, causing widespread instability. The 2008 financial crisis provides a historical precedent, where the collapse of Lehman Brothers in the US led to a global credit freeze and economic turmoil. A similar, or even more severe, collapse today would likely provoke stock market crashes worldwide and heighten financial volatility. Countries that maintain strong trade and investment ties with the US would be among the hardest hit. For example, Mexico and Canada, as close neighbors and trading partners, would experience significant economic contractions due to plummeting exports and diminished investment. Germany, with its export-driven economy, would also face a downturn as American demand for goods and services declines. Moreover, the Eurozone as a whole would likely enter a recession alongside the US, dragging down global economic growth and increasing the risk of a worldwide slowdown. Beyond these major economies, developing countries would suffer serious consequences as well. The Philippines, for instance, relies heavily on remittances from its citizens working in the US. A collapse in the American economy would reduce these remittances sharply, leading to increased poverty and economic hardship. Additionally, sectors such as business process outsourcing, which serve American companies, would face job losses. China, another major global player, would confront a drop in exports and investment inflows, exacerbating its existing economic challenges and potentially accelerating a shift in global economic power dynamics. The financial sector would also face severe strain. A US default on its national debt, a possible outcome of economic collapse, would intensify the crisis. Such an event could wipe out millions of jobs in the US almost immediately, further weakening the economy and triggering panic in global financial markets. Banks and financial institutions worldwide, particularly those with exposure to American assets, would face significant losses, potentially leading to banking crises in Europe and Asia. Moreover, global supply chains would be disrupted as manufacturing and trade slowed dramatically. Inflation could spike in vulnerable economies due to currency instability and reduced capital inflows. International organizations like the International Monetary Fund, IMF, have warned that escalating trade tensions and tariffs could compound these problems, pushing the global economy toward a prolonged recession or even depression. In conclusion, the collapse of the American economy would not be a contained domestic event, but a global economic catastrophe. It would precipitate recessions across multiple continents, disrupt trade and financial markets, and cause widespread job losses and social hardship. The interconnectedness of today's global economy means that the health of the US economy is critical to worldwide economic stability. Therefore, maintaining the strength and resilience of the American economy is essential not only for the United States, but for the prosperity and security of the entire world.